Alright guys, this is the one. I'm about to give you guys a look at a balanced portfolio. I'm about to give you guys a look into my personal portfolio and show you guys what I'm working with. Alright, so let's get to it. Alright, what's up guys? Welcome to Piece of the Pie with Ty. I'm Ty, and today I'm going to show you guys exactly what I got in my portfolio and the move, and I'm going to tell you guys why I invested into these stocks. Alright, we're going to go straight to the computer. Alright guys, we're going to go straight to Robinhood. My Robinhood account. That's what I'm going to be showing you guys today. Alright, so you can see in my Robinhood account, as I said, I've only been trading for 6 months. In the past 6 months, I have acquired 14%. I've made $1,441. All right. I've put in 10,292.50. All right. So that's the total. And how I've been saving this money, I've been allocating myself $100 a week. I put it in the stock market. Sometimes I buy a stock, sometimes I don't. But that's just how I'm saving. So if you have a savings account, you can easily just move your savings to the stock market. But of course, you want to know what you're doing. So that's what I did. And that's where you see this dip at. At first, I was just putting $100, and then I got serious about it because I saw that it was something that I could do myself. So I put some of my savings into it, and I did it right when this dip happened. All right. Of course, whenever you see a dip in the market that's steep as that, is a good time to get in, and that's what I did, and that's why I'm sitting at now. All right. So I'm gonna go down my stocks. I'm not gonna go deep into it because that'll make a long video. I'm not here to give you guys a lengthy video. So SPHD is an ETF, is a monthly paying ETF, and I'm invested into this ETF solely because it has stocks in this ETF that I don't have. So it's a way that I'm diversifying because a lot of the stocks in this ETF I wouldn't go out and buy myself. So yeah, they're not. At least I would, but they're not in my account right now. So it's a way how I'm diversifying by buying into those stocks by using the ETF and its dividends. So yeah. And one of the things I didn't say, but I want this account to be a growth and dividend account, kind of a balance. All right. And T TMFC, that's the Motley Food Index. That's basically their ETF. It's a mutual fund, but it's basically their ETF. And they are investing in big name companies just like the SPY. They are kind of neck and neck with the SPY, but the Motley Food Index is beating the SPY. Of course, the expense ratio is a little higher, but that is how I'm investing in companies I can't afford, like Amazon, like Google, a lot of the big name companies, Tesla, all those big name companies that I can't afford, using that ETF so I can afford them. All right. Cyber, another ETF that's mainly based on software and data. They have been doing great. They were doing great this whole pandemic. And a lot of the stocks in this ETF too, I definitely can't afford. If you guys have time, just go to this cyber ETF and go through and look at some of the holdings in there. Some of them holdings they're up there, like Oteka. A lot of those, a lot of those are highly expensive, and I can't afford them, so I bought the ETF. And then uh, FHLC, that's a healthcare ETF. There was so many healthcare stocks, I didn't really have time to dive into them, so I just bought the ETF. So that's a way of me letting the ETF work for me by buying a healthcare stock, ETF stock. And then Nerd, that's a gaming stock. Not per se, just not solely gaming, but more electronic entertainment. So they got a lot of companies in them that's mainly for like how COVID happened and everybody's doing online viewing. It's just online entertainment. Nerd has a lot of companies uh that basically centralize in that field. All right, so that's why I'm into them too, and they are doing great too. AMD, that's probably been my one of my best stocks I've picked, and I bought into AMD when they were around like $53, and they really paid off. First of all, let's switch this real quick. I'm gonna switch it to total percentage gain. As you see, all the ones I've been going through are winners. AMD, of course, every time you add more to it, your percentage goes down. But I was up like 74% in AMD. But I, of course, keep buying more because I believe in the company. And I got into AMD because I wanted to get into buying, backing one of the gaming consoles. Everybody know the PlayStation 5 came out and the new Xbox came out. And at the time, I was like, I got to buy one of their stocks. But I looked up who makes some of the parts in each of them, and AMD does. So like instead of banking on a brand, you can look at what both brands need, and that's a big part of stocks too. Like once you be able to look past just the logo and say, okay, all right, you got PlayStation and Xbox. All right, both are good. I don't know which one's gonna outsell the other, but what does both of them need? And AMD supplies chips. All right, so that's why I got into AMD. And another thing about AMD, one of the things I do want to look at too and show you guys, I used this too when I was going in buying AMD. On Robinhood, they show you basically the comps for each stock. Like right here, Nvidia, that is one of AMD's biggest competitors. All right, and let me show you guys this. AMD, the price of AMD is $96. All right, so and then when you go to the price of this one, it's $531. They selling the same stuff. So AMD had, to me, in my mind, the common sense of things, like I was telling you guys before, in my mind, AMD and this company here, Nvidia, they are in the same field. One is $531 and the other one isn't even at $100 yet. That's like, okay, all right. If they neck and neck, the other company could shoot to this. I wanted this company too, because of course this company makes chips too, but you guys see the price of this company. That's what made me go to AMD. It wasn't that anyone told me about AMD. It's that I was looking at what components does both gaming consoles need. And it just so happened I looked up on AMD. I looked up on AMD, but it was easy to say. It was easy to see because it was the common sense of things. It was something that both companies need. And that's one of the biggest part of the stock market. Making sure you understand that, okay, yeah, these are the brands, but what do they both need? All right. And then Apple. Everybody know Apple. Apple's a good company. As you see, my percentage on Apple is low because I didn't get into Apple until a little bit after the split. A little bit after the split. But they're doing pretty good, and of course they're a good company. Everybody know about Apple. Everybody gets a new iPhone whenever it come out. I'm not. I don't have an iPhone. I don't. But I probably might need one. But anyway, but you know how people just keep buying Apple products no matter what. They just keep going and going. So you know that company is gonna be big. Microsoft, of course, everybody know Microsoft is a big name company too. It's on a bunch of people's lists, and of course they are a stellar company. I bought into them late too. Um, right here, AYX, Artillery X. I'm in this company because this company is big on storage and data. If you know anything about the whole big data wave that's going on, that everybody, because of 5G and everything's gonna run off of storage and more data. So the data that we've been using, the the store things, is gonna be running a little short because it's gonna require more data for the newer technologies that's gonna come out, and they are at the forefront of that. So that's why I'm in them. Cloudera. This is a little risky one, but they are the same. They cloud storage data, a platform that helps companies with the storage of their data and stuff like that. So they kind of the same thing that AYX does, but Cloudera, they are cheaper. They're a startup. They haven't been, look at it, since the IPO. It was $17 and they went down to 12. But I'm hoping they're gonna shoot up. And I did read that they might be a good company that somebody else might come through and buy up, which is good, which would be good for them. But this is probably the only one of my really risky stocks I'm into. Usually I don't take too many risks, but yeah, they're one of my riskier stocks. But it still was good because they was cheap, and I just bought 10 shares of them. Corsair Gaming, yeah, they just IPO'd, and that looked crazy. The thing about them, they make computer parts, gaming parts, and stuff like that. And I think they were they doing good, and I think during the Christmas holiday, their stock's gonna shoot up too, because a lot of people are at home more on computers and stuff, and the stuff they sell are selling out the stores because of COVID, how everybody working from home, needing extra equipment and stuff. That's what they get. But the thing about them is, most of the time when people IPO, a lot of times it still be maybe just an idea, but they are a solid company that already have their legs under them, and they already have a PE ratio, meaning they already earning money off rip. Like a lot of times when they first IPO, the company isn't making money. They don't know how much money they're making. So I definitely do think this company will keep going. I'm gonna have a video about them later on, what's expected of them. But I got high hopes for them. Northrop Grumman, I did work for Northrop Grumman one time before, but they basically military. They build military contracts. They build things for the military, like satellites. They used to build ships for the military, but I think they are definitely a stock, a good company. I know that just from working with them, and their benefits for their employees and everything was stellar. So that right there lets me know that the company is pretty good. And yeah, I'm in them because I used to work for them, and I think they definitely a good company. And another thing, aerospace. Northrop Grumman is big on aerospace. So if you into the whole space and the next big thing and going into the air, Northrop Grumman, they might build the ones that the government shuttles or satellites. That's pretty big. They already build things for the government, and if we start actually going in space a little more, I think Northrop Grumman business will start booming a lot more too. All right, and Hiko, I'm into them. They have a lot to do with they build jets just like Boeing, but they were the cheaper one out of Boeing. At the time I couldn't afford Boeing, and they got a killer growth rate. Killer growth rate right here. Look at that. That's killer. But like I said, I got into them because they were under $100, and they were just like Boeing. I bought them during the dip, and it really has paid off. It's paid off on them. All right, next one, that is Southwest Airlines, and man, I really made out good on Southwest Airlines and Delta. I wish I would have bought more, but of course everybody was thinking they're gonna go bankrupt during the shutdown. But the common sense of things was they were gonna come back, which they did. 61% growth on one share of Delta. See, I had more Delta, but I think I sold Delta to buy Southwest because Southwest had a stronger company. But either way, I made money off of them. It's pretty good. And then Lowe's, everybody know what Lowe's is. Lowe's and Home Depot. I think Lowe's is the stronger company over Home Depot. And during the pandemic, Lowe's was doing great, and I still think they're gonna do great. And they give good dividends too. Darren Restaurants, I think last time I checked, because I know I had two of them at one point. They have restaurants such as Longhorn Steakhouse, Olive Garden, and other restaurants. But everybody know that the restaurant business was dying for a little while because of COVID. So I bought them while they were low, and now they're coming back. So yeah, we're looking good. It's still a good time to get into them. Like I said, because right now everything's slow with restaurants and stuff. It's closing again. But you know, eventually everybody's gonna start going back out to eat, and it's gonna make their stock price jump. Same thing with Cisco. Cisco delivers the food to restaurants. Deliver the foods to restaurants. Deliver the foods to the McDonald's and stuff like that. Grocery stores. Cisco is the one that takes people the food. Right now, their business took a hit during the shutdown too because weren't delivering to restaurants. But as you see, it paid off. That's a good percentage of growth right there. But it's still a good company overall. Coca-Cola, they took a hit too because if people aren't going out to restaurants, they're not giving beverages, drinks. Coke makes money off of that stuff. All right, so they're still a good company, and everybody know that's one of the good companies that Warren Buffett talks about how much dividends he makes off of that. All right, BAM, that's a financial company. And it's Brookfield Asset Management. They're doing pretty good, and they're into a lot of a lot of things like a bank basically. But they also got utilities and stuff too. But they definitely are a good one. EPRT, that's one I'm banking on good too. It's a REIT. It got good turnaround for me, and they pay good dividends. The main thing I like about them is their new REIT and their growth rate is great. So if you're looking for a REIT that still has potential to go higher, yeah, I think EPRT has the potential to become like a O Realty. All right. Anybody know anything about O? If not, you're gonna see a video about that too eventually. Nova, they are a solar energy company. So if you know anything about a power company like Dominion Power, Sonova is a solar powered like Dominion Power. So like they mainly in Texas, but they basically have solar powered houses, and they'll come set it up for you, and you bank your solar energy with them and all of that. But I really do think that's going to be the future wave, especially for big areas. They got receivers don't have many that flat area that don't have many mountains and stuff like that, trees in the way, like Texas. So Nova been doing good. And one thing that you guys must see, they got 100% buy. You really don't ever see 100% buy on anything. Sonova has 100% buy on Robinhood. The government even backing them. That's on one of their blue chip lists. Sonova. Pay attention. All right. And then CRSP, that's CRISPR. Two ladies won the Nobel Peace Prize for being able to alter DNA. Being able to alter DNA. They can make super soldiers nowadays. the CNN asked her that. She was like, yeah, we really can, but we regulate it. But CRISPR is one of them ones that could possibly cure a whole lot of diseases. Cure cancer through this method. Cure Alzheimer's through this method. They can, yeah, cure a lot of stuff. So after I saw those ladies win the Nobel Peace Prize, this year for that, I said I gotta invest in whatever company they got. I gotta have it because I think that's the future. They're gonna cure cancer out here. Look, well, we got 5G. We keep advancing technology. Of course, we're gonna advance medicine. All right. So, and then these last two bottom ones, they were just free stocks that I received from Robinhood for inviting someone. And currency, Bitcoin, Bitcoin, Bitcoin. Look at Bitcoin today. I almost got 100% return on Bitcoin. And I haven't been in Bitcoin for 6 months. Bitcoin is crazy. Crazy. The reason I'm in Bitcoin is I got something like a little investment in Bitcoin. But if you online and you go to research what Bitcoin is projected to do in like 5 and 10 years, they're projecting Bitcoin to go to like $1 million. Why wouldn't you put something in it? Just put $10 in it. You know, if it go to $1 million, what that would be. You know what I mean? So at least put something in Bitcoin if you don't believe in these cryptos that much, which I didn't. But yeah, it's doing this thing. Bitcoin and Ethereum. Ethereum. Yeah, I hope I said that right. But yeah, so I'm in that one too. And that's just 2 Bitcoins. But I can say if we go back, these 2 Bitcoins, all right, we're looking at percentage of growth. Hold on. 63 and 96. I don't have nothing over 96. Bitcoin killing every stock out here that I got right now. So, but of course they're more volatile. It is, cryptos are much more volatile, so be careful. So that's just basically, I just wanted to show you guys a rundown of what I had in my portfolio because I said I was going to do it, share it with you guys. All right, guys, so that was a quick look at my portfolio and what I'm holding in my accounts, what stocks I believe in, but I'm going to go more in depth into some of those stocks. You're going to see that I'm going to do a couple videos comparing some of those stocks to other stocks, but I definitely wanted to show you guys what I'm doing. And again, I only been doing this for 6 months, but as you see, winning, but it ain't hard. If you like anything in this video or you got any comments about anything, please like, comment, subscribe, please. That'll help me out. But I'm definitely gonna keep doing this. So please drop any comments that you got, any questions you got. All right. Thank you for tuning in. Ciao.